So when I started trading horse racing on Betfair, I had a big problem, and that was that I knew nothing about horse racing. However, that turned out not to be a problem at all, because where I started on Betfair, right back at the beginning of my career, was arbing. I would go to a bookmaker, back at the best price I could get, and then lay it off on Betfair. But I'd also traded on financial markets, so by combining the two, I actually gave myself a really good start in learning how to trade on horse racing. And in this video, I'd like to show you exactly what I did. If you're interested in learning more about Betangel and what it can do, then visit our website, but also visit the Academy, where you can get more detailed, structured content. You can also visit our forum, where you can speak to like-minded people and download additional content. And of course, you can visit our website to download a free trial of the cutting-edge software that will completely transform your betting and trading. So if you go back to the start of my Betfair trading career, I wasn't trading on horse racing. I was doing all types of other markets: tennis, football, golf, and actually financials was a big part of what I did in the early days when Betfair had financial markets, because I traded financials and I felt that that was a good market to shift into, because I just understood them so well and how they moved and how volatile they were and all that sort of stuff. But I couldn't help but be really interested in horse racing, because there were so many races. I just thought all I need to do is get a small amount from each of these races that will add up to a much bigger one. But the problem that I had was I had actually no idea about what I was looking at. So it took me a little bit of time to get used to some of the detail. And indeed, if you look at all of my trading videos now, they take into account many different factors. However, the strategies that I used way back then still work today. And, you know, they're slightly different in terms of the way that the markets behave, and you have to be a bit more selective and stuff. But fundamentally speaking, it's because the concept is particularly sound. And the concept was that when I first started on Betfair, I started trading almost by accident, because prior to trading seriously on Betfair, what I was doing is going to a bookmaker, backing something at 10 to 1, 12 to 1, biggest price that I could possibly get. And then I would just place the lay bet back on Betfair. And I woke up one morning and thought, why don't I do both on Betfair? Because if I can get those matched, then I can perform effectively like unlimited arbing. And I just thought, well, surely that's not going to work. But it did. And what you're going to see now is me talking you through the strategy that I used all the way back then, and you'll see that it still works today. Now, one thing I should put in here as well is that, you know, these strategies do have a particularly high strike rate. You're talking, you know, that you're going to win very, very frequently. And people often say to me, well, what do you do when it loses? Well, what you do when it loses is there'll be a time when you're looking to exit the market, which is typically just before the race is about to start, or maybe at about 2 minutes before the market goes crazy or something like that. And if your position isn't in profit at that particular point in time, you take a loss. It's that simple. There's nothing special that I do. I don't do anything amazing. It's right to expect that you are going to have the occasional loss and so on. But your focus fundamentally should be on trading the best that you can. And losses happen. Sometimes you just can't control them. But fundamentally speaking, as long as you follow the process and you refine and become a good trader and looking for the right opportunities at the right moment and stuff like that, then you don't have to worry too much about those losses, because that just comes out within the mix. When you see a P&L that I have nowadays when I'm using this sort of strategy, you'll see it's a mixture of positives and negatives, but overall I end up over the course of time. And that is simply because of the way that we're actually active and in the market. We're offering two positions to the market, both those positions getting matched, and then we're doing it again. Sometimes they don't get matched, and you have to take a small loss, but fundamentally speaking, as long as you're focused on the process, then there's no reason why you couldn't use the same strategy that I used all those years ago again today. So yeah, in this video, that's what I'm going to show you. I'm going to show you exactly how I traded all the way back then and why that sort of thing still works today. So when I first started trading on Betfair, my approach was really simplistic. And that was going into the market and pretending that I was arbing on Betfair. So what I would do is I'd back at a higher price than I could lay at. And when I would go to a bookmaker, I'd back at the highest price I could and then just lay it on Betfair. So I was sort of replicating that process. And you can still do the same thing nowadays. It's got its limitations, but nonetheless, this is exactly where I started. And the benefit of what I'm doing here is that it is directionless. I'm not making any judgment on anything else. However, I am making a judgment on the sort of race that I would do it on, because this is a handicap. It's reasonably competitive. And the time at which I joined the market is a time when there's a bit of liquidity in the market, but it's not in that chaos just before the off. So I'd be involved in the market somewhere between 10 and 3 minutes. And I would set up betangel with level stakes on these columns here on the one-click screen. And then I would basically just click the Make Market button. And what that does is it puts two orders in the market that you can see at the bottom. One is backing at the current low price, one is laying at the current back price. And what we're taking advantage of here is people will come into the market, they will place bets. Some of the people will be backing, some people will be laying. It will sort of, be a mixture of those two. But as the market sort of wobbles around in this run up to the start of the race, it just takes out both of those orders. So you can see we've got an order waiting at 6.4. We are part of that near £100 that's there, and that order will get taken. And then as soon as that order is taken, we will have a profit. So all I've done is pick here a race that is reasonably suitable, got involved at a reasonable time, and there is our profit. Now, if we wanted to hedge that, I would just click on the green button here, and then you can see I can spread that profit across the field. But there's no reason that you'd have to necessarily stop immediately after you've done one successful trade, because the trading process really is you do one trade and then you do another. So if we go in here and actually perform the same trade again, our risk is not the same as putting a £10 into the market, because we've made a £2 profit already. So if I go into here again and click on the Make Market button, or I could choose another runner, then the advantage that we have with this is that we can put another trade through the market. So we're using exactly the same stake, but we have slightly lower risk within this market. So I'm going to do another trade here on Rose Branch. Again, those two orders will be waiting in the market for somebody else to get matched. We don't know why they want to get those orders matched or what reason they're backing or laying. We don't really care, and we don't care about the direction that the market goes in, because we're just relying upon that sort of wobbliness in pricing to take out both of these orders. So this is how I started on Betfair trading. So you can see, as I predicted, because the market's meandering around within a traded range, which is what you'd expect in this market type, the order's been taken. So, we are perfectly good. Now, we wouldn't open a new trade in this period because we're quite close to the off, and the market goes a little bit more sort of manic at this particular stage. So that doesn't suit the characteristics of what we're looking for. So at this particular point, we would hedge because we have finished our trade. We've put two trades through. Both of them have been matched, and we can hedge our position. If that other order wasn't matched, then we can choose to take that order out as we approach this busier period, or when we get almost to post time when the race is about to start, and we need to exit the trade at that point because we don't want to take it in play. So yeah, this was the simple process that I used when I started trading on Betfair. So I began to work out pretty quickly that there were some markets where hitting the Make Market button didn't work so well, and that was because the price would just drift off in one direction and never come back. This characteristic trading in a range, this sort of stuff wouldn't work so well. And here is one of those markets. You can see that this is a maiden race. The favourite is priced at 2.2, and that means that the price of the favourite is going to move. We can look at this market some way out and just go, the price is going to move. We know it's going to move, and that will influence the prices across the rest of the book. So I had to find a way of being able to do roughly the same sort of thing, but without relying upon a stable traded range. So for that, we sort of have to look at the ladder. And the ladder gives us more information than we get on the one-click screen, but it also tells us what's going on with the full market depth. So we can see there's money above and below the current prices, where it is within the current traded range. Those sort of things were incredibly helpful because you could understand or get a feel for where the price is likely to go and whether it's at the bottom or the top of its traded range. And the tactic that we would use here would be very different, because what we do is, rather than going in at the current price and backing at the current low price and laying at the current back price, I would look up the ladder and click on something at 7.4. And the reason that I did that is because there wasn't much money there. And then I would go down the other side of the ladder, look down here, and you can see there's bits of money available all over the place here, but there's not much money at 5.5, so we'll go there. And the advantage of doing this is that we get our closing position in the market first, and then we wait for the market to come down and meet it. And when it's close to meeting it, I can click on the other side, And that means that I've got an order in at 5.6 and the closing order is going to be at 5.5. There's a short-term direction, a push in this direction, and that means that we're quite likely to get both of those orders filled fairly quickly. And we can sort of confirm that by looking at a chart and seeing where the current price activity is, and we can start to get a little bit more sophisticated. But basically, by putting an order above and below the current price, we know that we're near the front of the queue at 5.5, and therefore we won't need to get matched with much money in order for that order to get taken. We can also see that we're roughly in the middle of that traded range, so that makes us feel a bit happier there. But also you can start doing clever little things like saying, well, the favourite's at the bottom end of its traded range, and as a consequence, you know, that price could start sort of flying up in the other direction. Any price going up on their favourite is going to put the price down on the second favourite, and you know what, we've got an order there. So you can see that we did all of that already, and you can see that that's netted as a profit on this particular selection. And again, we can repeat that process again. So if I look above where the current price is, I can see, well, there's not much money at 24. I'll put £24 there. And like, you know, there's only £9 at 4.1, but that's at the right off the bottom end of the current traded range. So it's probably unlikely to be reached, or if it does, it would take quite a dramatic move, maybe the favourite drifting in that direction. So yeah, you'd probably want to put it somewhere within this current traded range, but preferably not at the bottom or outside of where the current money is. But because we've got these orders further up here, then as the price comes back in that direction, we can repeat the trade on the other side. So this was how I sort of solved that problem of actively trading these types of markets. So you can see the price has come up here. I've put the other trade in front of it. It happens so quickly when you trade in this manner, it's impossible to set something up to record it if you're not recording already. But you can see we've still got this order at 7.4, so if it goes up this high, we can still trade in there, or we could just pop another order a little bit further down. But again, can you see we're doing like a directionless trade? We don't have to think about which direction it's going in because the market is sort of telling us. All we're doing is we're putting ourselves in a good position to get matched on both sides depending upon where it goes. So we could put something in at 6.8 here, and if it decides to tick out a little bit more, I can just jump in at 6.6 and take advantage of that. So you can see here that again what we're doing is we're taking advantage of the way that the market's moving, and we're sort of anticipating that something's going to happen, but we're not making a judgment on exactly where the market's going. We're giving ourselves options on both sides, and we're just taking advantage of that little bit of movement that you get in the center of the market. So when I started trading, I didn't know much about horse racing. I know a lot more now, and therefore my strategies have evolved and developed over time to target specific races in specific ways, and I have done videos on those if you want to watch those. But when I started, I was sort of just looking to exploit that short-term price movement. And if you're trying to understand why and how trading works, that's essentially why it works, because you're offering two prices to the market. Both those prices are getting taken out, and you're netting the profit between the two. When we're looking at the handicap, we know that the handicap races where the prices are roughly even across the entire book tend to produce markets that sort of trend sideways. And we're just sitting within that traded range and taking out on both sides. That's where that profit's coming from. And where markets are gently trading in one direction, or trending, I should say, in one direction or the other, then we're just nipping into the market ahead of that. We don't know which way it's going to go, but we are putting positions in the market that will be able to exploit that. And essentially, this was where I got started with trading. I've managed to develop and layer more complex strategies and execution into the markets over a number of years. But fundamentally speaking, this video should give you a very good indication as to why trading works, how to exploit it, but also when we get those little short-term price movements, such as we get within horse racing, how to profit from it.